If a down payment is one of your savings goals, have you considered using bond index funds? This could be a game changer in how you save for a down payment. So in this video, I'm going to be covering what bond index funds are, the pros and cons of them, where you can buy bond index funds, and the specific type of bond index fund that I use that has helped me grow my down payment to over $120,000. Hey, what's up guys? It's Justine with Debt Free Millennials, the channel to help you crush your debt and live payment free and build a huge down payment using bond index funds. Now, disclaimer right up front in the video, I am not a financial advisor. I am not a CFP. This is a video strictly for educational purposes to show you exactly what these types of index funds are and how you can use them to your advantage. So if you started building a down payment and you've been using a high yield savings account or a money market account, then you probably already know the interest rates are just abysmal right now. Right now, my high yield savings account, I'm earning just 0.5%. And when I had my money in a money market account, it was even lower than that. It was like 0.07%, which is ridiculous. That's when I started looking elsewhere to figure out where could I grow my money in a short to mid-term time span, so think like 3 to 5 years, and actually earn a really good rate of return. That's where bond index funds come into play. Now let's start with the definition of what a bond index fund is. Now, I love this definition from smartasset.com. A bond index fund is a diversified portfolio of bonds that are chosen to align with the performance of a specific bond index. Now, a bond index fund tracks the performance of an index. And I want to show you this one from Bloomberg. So this is the Bloomberg Barclays U.S. Aggregate Bond Treasury Index, and you can see how this thing has performed over the last 4 years. And a bond index fund is going to track that same performance of that index. Now, we all know what a bond is, right? A bond is a type of investment in which you as the investor are loaning money to the borrower, and that borrower is paying you back plus interest. Now, typically bonds are issued through U.S. treasuries or different various forms of government, and then those different types of government, city, municipal bonds are then paid back to you with interest. Now, the idea with bonds is that they come with lower risk, but they also come with lower rates of return compared to stocks or stock index funds. Now let's go over the major benefits, the pros of bond index funds. With bond index funds, you have the opportunity to earn more interest than you would with a money market account or a high yield savings account. You also are in a more conservative fund than you would be with individual stocks or stock mutual funds. So that means that you have less risk of losing money in a bond index fund than you would with a stock index fund. Bond index funds also keep up with the rate of inflation, unlike a high yield savings account or a money market account where you're earning literally less than 1%. And we all know inflation can be sometimes 2 to 3% per year. And so bond index funds can help you keep up with that rate of inflation. And lastly, they're very good for short to mid-term goals. So think 3 to 5+ years. And if you let your money grow in a bond index fund for that short to mid-term time frame, you're going to see the best rate of return in most cases. As with any type of fund that you're investing in, there's going to be some cons. So the cons of a bond index fund is there is still a chance that you could lose money on this type of fund. That's definitely happened to me in the past. And so you have to learn that even though there is less risk, there is still a chance of risk that you could lose money in this type of account. Also, bond index funds come with fees. So there is a fee for the specific type of fund that you purchase. Plus, there could be additional fees from the investing platform, such an account service fee, an annual management fee. If you are working with a financial advisor or broker and they're actively managing that account for you, There's also going to be some actively managed fees, so you'll want to take a look at that and make sure that you are reducing the amount of fees that you pay on this type of fund as much as possible. So where can you buy bond index funds? Basically, any and most investing platforms are going to have bond index funds available to you. I personally use Vanguard, and we'll do a complete walkthrough of the bond index funds that I use, but there are other investing platforms that you can jump on, such as TD Ameritrade or Fidelity, and they'll have bond index funds for you to purchase. Now, if you're confused on which investing platform to use, I just discovered this awesome tool called moneymade.io, where you can take a quiz based on your investing preferences, and then they'll spit out a list of results of different investing platforms that fit your needs. So check out moneymade.io. I will leave my affiliate link in the description box. One thing I also want to mention about bond index funds, because this is a short to midterm goal that you're having for your down payment in most cases, when you sell those bond index funds and withdraw the money from your brokerage account, which is where you're going to set up your bond index funds. You're going to open up an individual brokerage account, and then you're going to purchase bond index funds inside of that account. When you sell those funds and you're ready to use the money for your down payment, you will have to pay capital gains tax. Capital gains tax is broken up into two different categories. There's long-term capital gains, in which you've held those bond index funds, or any funds for that matter, for more than a year. If you've held it for more than a year, then you will be taxed at your income threshold. There's also short-term capital gains, in which you've only held the funds for less than a year. And if that's the case, you will be taxed on those gains, meaning the amount of money that you've earned on those funds, at an ordinary income level based on your tax bracket. All right, let's do a quick walkthrough of the specific bond index fund that I use. All right, so the bond index funds that I use is the Vanguard Total Bond Market Index Fund, and I'm using the Admiral shares. And the Admiral shares simply means that you need a minimum investment of $3,000. Now, if that's too steep for you, they are available as an exchange traded fund, which means you will only be paying the price of one share. And they're pretty much the same thing, other than with the Admiral shares, you can continue to set up automatic monthly contributions, and it's just going to continue to purchase those bond index funds. Whereas the ETF version of that, you're only buying it at the price of per share, and you've got to do that manually through Vanguard. But back to the Admiral shares, because this is exactly what I have. This fund, this bond index fund, is designed to provide broad exposure to U.S. investment grade bonds. Reflecting this goal, the fund invests in U.S. Treasuries and mortgage-backed securities of all maturities. So short, intermediate, and long-term issues. And I'm going to scroll down to the bottom here. And again, going back to that less risk, less reward, they're sitting at a level 2 based on the Vanguard scale. And then you can see, I love that they do this simple chart. Their website is not it's not very advanced in terms of the UX, but I do like how simple this is, because you can see the hypothetical growth of $10,000 over the past 10 years. Now, I started, I'll show you my investing performance here in a second, but I started back here in like 2017, 2016, and then we've seen it go up over time. Now, what's cool about purchasing bond index funds specifically is that you are not cherry picking various bonds and having to do all this research on just a single bond. There's actually multiple bonds within one fund, so it gives you a broad range of different bonds and that exposure. So down here at the bottom, it actually says the number of bonds is over 10,000. And the fund total net assets is $305 billion. Now let's take a look at the price and performance of the Vanguard Total Bond Market Index Funds. So I'm going to scroll down here to the bottom to the average annual return. This is what you'll want to pay attention to when you're selecting your own bond index funds. So this one in particular, they break it up between 1, 3, 5, 10-year mark, and then since inception. But you'll want to pay attention to the 3 to 5 year range, because if that's truly how long you want to save for your down payment, that's where your rate of return is going to be. So the 3-year rate of return is over 5%. Once you get up to the 5 to 10-year mark, there's really not much of a difference, about 3.5%. And then since inception, since this fund was created in 2001, it has earned an overall rate of return of 4.23% interest. Now, I don't know about you, but that's way better than anything I've ever earned in a money market or a high yield savings account. Now let's look at the types of fees that are involved with this type of fund. So the expense ratio on the Vanguard Total Bond Market Index Fund is 0.05%. However, like I mentioned before, there is an initial minimum investment of $3,000 unless you purchase the exchange traded fund version of this exact same bond index fund. In that case, it's just the price of one share. I also like this helpful chart in which they can compare the industry average fee versus the fee on this type of share, which was only $67 on a $10,000 investment over 10 years. And then the industry average was $848. So Vanguard, they're doing something right with their fees. Now, keep in mind, that's just a fee for the actual fund. There could be a fee for using the investing platform. And Vanguard says it right here. There's an account service fee of $20 for each brokerage account plus each individual Vanguard mutual fund holding with a balance of less than $10,000 in the account. Now, there is a way you can avoid this. They say this fee does not apply if you sign up for account access on Vanguard.com and choose electronic delivery of your statements. Easy. If you're a millennial, you're probably already doing this already with all of your bills. Electronic statements and deliveries are awesome, and that's a great way to avoid an extra $20, $40 per year. Okay, now let's take a look at my personal performance using bond index funds to help me save for a down payment. So this is inside of my non-retirement, this is my brokerage account, and so far I have earned 5.6% rate of return. So you can see I started this guy back in 2017, and there was a period of time where I actually did lose money. So you can see in this little red zone, this is where I lost money. And since about, 2019, over the last 3 years, I've seen this account balance grow and grow, and I've set up automatic monthly contributions into this account. So you're probably wondering, didn't you say earlier in the video that you had saved over $120,000? Yes, and I still have a big portion of my down payment savings in a high yield savings account because we are getting closer and closer to buying our first home, that I wanted to make sure I had enough liquid cash, more liquid than what's inside my brokerage account. So I've slowly transitioned more money into the high yield savings account, and I've lowered the amount of monthly contributions into my brokerage account. So in a nutshell, that's how bond index funds work and how you could use them to save for a down payment. Now you could also use the same method and open up a brokerage account and use bond index funds for saving for a car purchase, a boat purchase, maybe you want to save for a tiny house or an RV, whatever it is. If you have a goal of about 3 to 5 plus years, this could be a way that you could save for that particular goal. So I'm not a financial advisor. I'm not a CFP. Please take this video as educational purposes only. And this is my personal experience with using bond index funds. I've found them to be really helpful in my down payment journey. And let me know, how are you currently saving for a down payment? Are you using something like this, or are you just putting this in a savings account? Comment below, let me know if you are here for this video and here for down payments. Give me a big thumbs up, and I'll catch you in the next one.